Hi everyone, I'm your friendly auditor and I'm going to explain a bit about the audit procedures that we perform. We're going to look at the overall materiality, preliminary analytical procedures, and looking at the top trial. Okay, so I'm going to explain about the audit work that has been done for the prior year audit for the year ended 2017. Okay, so as auditor, I will obtain the trial balance from the audit client. So this is the trial balance that I have obtained, and I will also obtain the balance sheet as well as the P&L from the audit client. Okay, so with the figures here, I have to agree the figures to the prior audit working papers. So this is the audit for 2016. I will just check through that the figures agree to the prior audit working papers. Similarly, for the balance sheet, okay, so the figures here should come from the trial balance and it should tie in nicely. So for example, investment is $3,000. Just check back here under investment. Let's have a look. Here, for account number 180, investment is $3,000. So for the information given by my client, I will going to check that the amounts do tally, and I will also perform casting. So casting is adding up the figures. So this is $3 million plus 4181480. So this plus this, the sum of this should be 7181480, and this is added up correctly. And then I will have casted the figures properly. Okay, so once I have casted and checked that the balance sheet, P&L, and the trial balance from the client is correct, I would want to populate my top trial. Okay, now so the top trial is like the summary that the auditors can look at the financial statements at one glance. So the figures here should ultimately agree to the financial statements. So it'll be easier for him to see what are all the adjustments and how much is the amounts pertaining to different classes for the assets and for the liabilities, so on and so forth. Okay, now so for the top trial, again, you will need to perform the roll forward procedures. So this has already been rolled forward. So before you come to this page, you as auditor will have to remove all the prior year figures, copy in the current year figures into here, and this will be populated with the current year figures instead. So therefore, since I'm in the audit for 2017, this $3 million would have come just now from the trial balance of $3 million too, and these figures will agree to prior year figures. Okay, now so once you roll forward, this will be what it will look like. Now this top trial is for me also to see where the misstatements would come in. So for example, when I audit certain procedures and then I realize there's a misstatement identified, I will need to adjust the for the misstatements. So for example, I have identified a misstatement. Okay, so the misstatements will be put into the misstatement listing as a proposed adjusting entries. So I have a proposed adjusting entry of sales 12,500 and credit trade receivables 12,500. So I will need to go and debit this into sales and credit the corresponding entry into trade receivables. So in my top trial, I would have debited sales AJE1 12,500, and in my balance sheet under trade receivables, I would credit the adjustment here. Okay, so when I have a lot of adjustments in B6, all the adjustments should be populated here nicely, so at one glance you will know what is the adjusted balances. Okay, so again, you will need to perform all the agreeing of the figures, prior figures, agree this to trial balance, and you should perform the casting accordingly for all the figures. So for the audit for 2017, this is the work that I have performed. Now I'm going to look at the working papers for A section. So once we have prepared the top trial, I will need to determine my overall materiality. Okay, so the materiality, my base will be, I'll be using the profit before tax amount, okay, because our company is profitable. Okay, so this amount will come from my profit before tax. So when I look at my P&L, Okay, let's have a look from my P&L from here. My profit before tax is 5772451, and this is where I get my figure from, 5772451. I will need to adjust for any one-off items. So if there are any items that are not in the ordinary course of the business and is one-off for current year, I will need to remove this. But because I have already looked through the files and based on my understanding of the business, based on my understanding of the operations and all the information that has been given to me, I've determined that there is no one-off item. Hence, for here it is 0. Therefore, my adjusted profit before loss is 5772451. Then I will apply the percentage use. In this case, will be 10%. So my overall materiality for the year will be 577,245. Now, so in this case, there's no justification for the one-off items because there are no one-off items here. But if you determine that you have items that are one-off, you need to explain why these items are one-off and why this needs to be adjusted. So once we have determined the materiality, we are going to perform the preliminary analytical procedures. Okay, now so this is the preliminary analytical procedures that I have performed for the audit of 2017. So let's look at cost of goods sold. All right. Now, so the preliminary analytical procedures is for the auditor to come up with his auditor's expectation based on his understanding of the business, based on understanding of all the facts that has been given to him. What is a reasonable amount that the auditor will expect? And if the figures provided by the client differ drastically from the auditor's expectation, perhaps this is an indication that there might be misstatements in this account. Okay, so for example, let's look at cost of goods sold. Now, cost of goods sold generally would follow in tandem with the increase or decrease in sales. So if sales increases, we expect cost of goods sold to increase. This is my auditor's expectation. Okay, now hence I have explained here that we expect the cost of goods sold to increase because there is an increase in the sales volume for 2017. So how do I know what is the increase in sales volume? Here is my working. So I have worked it out that the sales volume has increased by 95.75. So this is just one suggested way of calculating your cost of goods sold. There are many other ways to determine a reasonable increase in the sales volume. Okay, so if I take last year's cost of goods sold, which is 5865040, I times the increase in sales volume, so it's increased by 95%. Okay, and then I will expect my this year's sales cost of goods sold to be 1140815. Okay, so when I put my auditor's expectation, okay, so here should be 1140815. Okay, now so the variance here will be taking the auditor's expectation of 1140815 minus of the client's figures of 1,176,000, and that will give me 304,815. Okay, so I will find what's the percentage increase, so which is 304,815 divided by auditor's expectation to give me 2.7. So you can see here there's a fluctuation of the cost of goods sold from our auditor's expectation of 2.7%. Now, as we have gone through in the lecture, that our tolerable variance would be 5%. So only when it's more than 5% or more than negative 5%, then we will identify this as accounts with a higher risk of material misstatement. So in this case, cost of goods sold is not an account with a higher risk of material misstatement. So you will do the same for all the different accounts. So for sales, for assets, salaries and wages, employee and director bonus, based on your understanding of the business, okay, based on all the facts and figures given to you, what do you expect your auditor's expectations to be? So you need to document clearly what is the rationale for your expectation and how do you get the calculations for this current year's figures. So give you an example. So we're looking at employer CPF. So I will have gone to check the CPF website to see what would be the CPF rate that I'm supposed to use, and I'll apply the relevant rate accordingly. So in this case here, based on my auditor's expectation, I realized that the increase is very huge of 19.8%. So since the increase is very big, I will identify this as an account with a higher risk of material misstatement. Okay, so I'll do the same analytical procedures for all the accounts all the way to the bottom. And then since I've already identified that employer CPF is of a higher risk, I will document this in my next section when I have identified accounts with a higher risk of material misstatements. So here I will need to document down what the accounts from A2 which have more than 5%. So in this case, sales and employer CPF will have been more, because you see the increase is 7.5%. Here the decrease is 12.8%. So in this case, I will document down the account, and I'll need to explain why I feel this account is unreasonable. So based on whatever reason you have, you document down the figures here. So this is very important to identify accounts with high risk of material misstatement, so that the auditors can focus more time and gather more evidence to reduce the risk of material misstatements in these accounts. So that is in a nutshell of explaining what I as auditor have performed in these audit procedures.